So, Bitcoin. You've heard it called a lot of things, right? But there's one nickname that just sticks. Digital gold. It's a phrase that's kicked off a million arguments online. But what does it really mean? Today, we're going to unpack that.
I mean, you hear these huge claims all the time, don't you? It's a financial revolution, a technological marvel. But honestly, if you strip away all that noise, the entire argument for why Bitcoin has any value at all really comes down to this one powerful idea.
Yeah, digital gold. And look, this isn't just some slick marketing slogan. It's the whole framework people use to even think about what Bitcoin is for. And, as we're about to see, it's a lot more accurate than you might first guess.
So, what does that actually mean? How can something be like gold, but live entirely online, made of pure information? All right, let's break it down piece by piece.
Okay, so the whole digital gold thing, it all starts with the most basic, most important quality of anything valuable. It's gotta be scarce. But with Bitcoin, well, it takes that idea to a whole new level.
See, unlike the money in your wallet, or even something like a precious metal, Bitcoin was built from the ground up with a strict, non-negotiable supply limit. This isn't a promise from a politician. It's math. It's just baked right into the code.
And here is that magic number, 21 million. That's it. There will never, ever, ever be more than 21 million Bitcoin. Period. The last little bit will be mined way out around the year 2140. And after that, the supply is locked forever.
And this gives us something totally new, something economists call absolute scarcity. Now think about this for a second. Gold is really, really scarce, right? But if the price goes through the roof, you better believe companies are going to spend billions to find more of it. With Bitcoin, you can't. It doesn't matter what the price is. The supply schedule is set in stone. It might just be the first truly finite asset humanity has ever had.
And this scarcity isn't just some pinky promise, you know? It's enforced by the code itself. There's no committee in a fancy room that can just decide to change the rules. Instead, the creation of new Bitcoin gets automatically sliced in half about every 4 years. It's an event called the halving. This means the inflation rate is programmed to go down over time, automatically.
All right, so Bitcoin's got this gold on steroids scarcity thing down. But the fact that it's digital, that's not just a cool feature. It's what gives it some huge advantages over that heavy yellow metal.
Just try to picture it. You need to move $1 million in gold from here to Tokyo. You're talking armored trucks, guards, insurance. It's a total nightmare. With Bitcoin, you can send that same $1 million, or $1 billion for that matter, to anyone, anywhere on Earth with just an internet connection. And it gets there in minutes.
Okay, but what about smaller stuff? You want to buy a coffee with gold? You can't just shave off a little gold dust at the counter, right? It's totally impractical. Bitcoin, on the other hand, is super divisible. One single Bitcoin can be split into 100 million tiny little pieces called satoshis, so you can use it for anything from buying a house to buying a latte.
Now, all of this leads us to a really important idea. Bitcoin is what's called a digital bearer asset. I know, it sounds super technical, but the concept behind it is actually pretty simple and incredibly powerful.
So what does that actually mean for you? It means if you hold the digital keys to your Bitcoin, you own it, like really own it. No bank can freeze your account. No government can just take it without those keys. It's true digital property. And that's a world away from how the normal financial system works.
All right, so we've got the Bitcoin versus gold angle down, but what about the money we actually use every single day? You know, the dollars, the euros, the stuff in our bank accounts. How does Bitcoin stack up against that?
First things first, we got to have a name for that kind of money. It's called fiat money. And basically, fiat money isn't backed by anything physical. Its value comes purely from our collective belief, our full faith and credit in the government that issues it. This is the system all of us grew up in.
And that right there brings us to the first huge fundamental difference: who's in control. With fiat money, a small group of people at a central bank calls the shots. With Bitcoin, the rules are in the code and they're enforced by a massive global network of users. There's no CEO of Bitcoin.
And difference number 2, it's all about supply. We just talked about this. Bitcoin's supply is fixed. It's capped. It's done. But the supply of fiat money, well, it's basically unlimited. A central bank can literally decide to create more of it whenever it wants. These are just two completely opposite ways of thinking about money.
And when you really lay it all out side by side like this, the differences just jump off the screen. You've got decentralized code versus centralized authority. You've got fixed supply versus unlimited supply. Even how transactions work is different. Bitcoin is peer-to-peer. Fiat relies on intermediaries like banks.
It's just two completely different worlds. So when you step back and look at the big picture, what's the real takeaway here? It's that this isn't just about two different assets or technologies. It's about two totally different philosophies of what money is supposed to be.
On one hand, you have the system we're all used to. It's built on trust. We trust our governments, we trust our central banks to manage things correctly, to not mess with the value of our savings, and to generally do the right thing.
And on the other hand, you have Bitcoin. It takes let's say, a more skeptical approach. It wants to replace that trust in people and institutions with trust in pure mathematics and code that anyone can check. The motto is kind of, don't trust, verify.
And that really leaves us with the big question, doesn't it? The whole digital gold idea, it's not just about scarcity or tech. It's really about control. It makes us ask a pretty profound question. Looking forward, do we want the future of our money to be governed by code or by a committee? That right there is the real debate.